Alright guys, we're starting to live stream right now. We're just going to hang out for a little while and wait for people to join in and make sure that the audio is good, make sure the video is good, and make sure everything's good since I've never done this before. And we'll make sure everything's going well. Go ahead and use the chat and we will get started. You'll be able to talk to me on that too, so don't forget that. I need to know if you can hear me alright and you can see me alright. And you'll probably see my screen, and you'll see a million screens there, so. Alright, hey guys, I know a few people are watching. Go ahead and just hit into the live chat as soon as you get in. We're going to wait a couple minutes to start. Cool. Hey Kevin, welcome to the crew. Welcome to the club here. Cody's here. Good AV. Thanks a lot. I gotta look down here. I got my iPad going up because obviously you guys can see anything that's on my monitor here. So I just want to make sure I can see your chats here as well as you guys just see my screen and not see the redundancy in the video. Pretty stoked to start this off. So we'll give it a few more minutes maybe. Hopefully we can get some more people and then we'll get started. Hey Eric, good to see you there, man. Hopefully you got some good audio and visual as well. Alright guys, so like I've been saying, we're just going to go over some technical analysis points here. I'm going to go through a few slides that I have up, set up ahead of time. Nothing crazy, just a few indicators that I use day-to-day basis. Pretty excited about that. We're going to go over candlesticks, line charts, even how I don't like them. Go over volume, support, resistance, moving averages. Really anything you guys want to talk about, we're going to talk about. Like I said, I have a few talking points, but you guys just chime in. You have questions, I can see them come down here on the iPad as they come up. If you have any questions, we'll just stop and we'll go off on a tangent. Really don't care. It's just really just for you guys, because I know the guys there at Crypto Island really support me and they asked to do this, so I just want to be able to give back to the group a little bit since you guys have been so helpful. So I'm just going to transfer over here and see if we got a couple people in. Looks like we have 7 people watching right up there. We'll give it about 1 or 2 more minutes and then we'll go ahead and get started, okay? Just got to shoot this link off to some other people, and then I think we're going to get started. Cool, guys. All right, so I just got a request to do send a link out to a couple more people. So that's what we're waiting on right now. I said we go ahead and slowly get started. I just really wanted to welcome everybody. Like I already said, everybody at Crypto Island and Stock Thoughts on Facebook. I just want to give a shout out to them for kind of giving me the kick in the butt to get this started. I think it's a pretty cool idea. Hopefully it works. Just remember it's a live stream, so I know that it is it's about probably 480p. Hopefully the audio is clear and the video is clear enough to see it. And we'll move through the slides slow enough to where the resolution is really not going to matter too much. You'll be able to see exactly what I see. Did obviously want to make a point that I am in no way, shape, or form a financial advisor by any means. Just something I've been doing as a hobby and in my free time, all my free time for the last 2.5 years. I really enjoy it. I've been trading stocks for those 2.5 years and then crypto just since May. And I've been using technical analysis ever since I started, self-taught through copious amounts of reading and YouTube videos just like this. So I'm pretty excited to get started. And so let's see, financially advise me. I will, Dr. Hutton Stuff. That's a good name. All right. So let's get started here. So obviously TA is technical analysis. So I just want to start off giving you guys the textbook analogy. This is obviously from Investopedia, which is a great website to go to if you don't know something. You go there, they have tons of information, graphs, charts, definitions, examples. So it's a really good tool to use. And of course, they're saying technical analysis is a trading tool employed to evaluate securities in an attempt to forecast their future movements by analyzing statistics gathered by trading activity, such as price and volume. So that's Investopedia, but I don't know, if you've never traded before, you're probably like, what the heck does that mean? So what does that mean? It's pretty much we're analyzing history of price movement for a stock or coin, right? That's all a chart is. That's all your technical analysis is interpreting a visual history of that price movement. And whether you're looking at candles or whether you're looking at lines, you're just looking at the history of that stock price. Let's see here. So you're looking for reoccurring patterns and the best assumption for the possibility of your next move based on that pattern. But, as they always say, something along the lines of past movements in history, it doesn't always indicate how the price is going to move in the future. And if anybody here trades crypto, that's definitely more than true, as crypto does some crazy, crazy stuff. Stocks do too, and it really just depends on what kind of stock or crypto you trade. If you have your blue chip stocks, they're going to trade with a lot less volatility than a penny stock. And a lot of crypto trades just like a penny stock, in my opinion. So let's keep on moving along. Reading the charts. All right. Cool. So a few things to note again until we really get into it. Like I said, a chart is a visual and historical representation of what traders are willing to pay for a stock or coin. So this is just going to be about technical analysis, right? I'm not really going to go ahead and teach, like, what does that mean that they're willing to pay? What is a stock price? How is a stock price or a coin? How is it valued? What it's valued? Like, that's kind of a complicated process, but just know that the chart is a visual representation of that. Like I was saying earlier, there has to be a seller and a buyer for every transaction, right? So if you're trying to sell a coin or you're trying to sell a stock, you can only sell it if there's a buyer, and vice versa. And that's where, volume comes into hand, as we'll get to a little bit later. But there has to be volume for that, right? No volume, it's probably not a market you want to trade in, or a coin or a stock that you want to trade in, because you're not going to be able to sell it or you're not going to be able to buy it for the price that you want. Another important thing to remember is you're never going to buy the bottom and you're never going to sell the top. I think this is where a lot of newer traders get frustrated, because they're like, hey, dang, I didn't get that double bottom or whatever, and I try to buy the bottom, but I can't do it. Or I try to sell at the top and I can't do it. it's not going to happen. You want to get a nice chunk out of the middle. So that's just something to keep in mind. Never beat yourself up about this stuff, and just always try to maybe just take notes, something I do, and learn from it and just apply to the future. But you're never going to buy the bottom. You're never going to sell the top. Just take a chunk out of that in the middle. One thing to note, I know there's a lot of experienced traders here that probably know a lot more than me, and there's traders that you maybe haven't even gotten started. So just note that, stocks are trading between these times, right? So it's a set amount of times. What is that, like 7.5 hours? But crypto never closes. It's 24/7, 365, and that's one of the beautiful things about cryptocurrencies. And that brings up a point that I love making to people that I've never talked to before. You do the calculations, and I'm terrible at math, so this is wrong. Go ahead and call me out. But that means that crypto is probably moving roughly 3 times faster than stock prices, because stock closes at 4 p.m. Eastern, and that crypto is still going while you're sleeping, still making money while you're sleeping. So that's another reason I absolutely love cryptocurrencies. And I think that's, one of the main proprietors of why Bitcoin goes through the roof, along with 1,000 other plus cryptocurrencies that are going on there. But of course, Bitcoin being the biggest one right now, is being the originator. All right, so let's get started. I'm going to check these texts out real quick, and then we're going to get into the meat of it here. And BCH just went live for buying and selling on Coinbase. Thanks, Cody. That's pretty incredible. I know we were talking about that on, I think that was on Crypto Island. And I was hoping it would be ETC, but BCH makes a lot of sense, so that's pretty cool. Anybody owning that is probably going to get a nice addition to their money bags. Pretty cool. All right, guys. So 33%, that's pretty incredible. So I think this chat is real time, and I think the video might be lagging a little bit. So let me know if there's a little bit of latency. I think it's about 10 to 15 seconds. Cool. So let's go ahead and get started. I'm not going to look down at my chat immediately, but I will look down at my chat intermittently. If you guys have a question, like I said, just stop me, and we'll keep on, we'll go from there, whatever you guys think. And so let's get started. So I always preach to learn candlesticks, so that's why I want to start off with candlesticks as opposed to line charts, because candlesticks will give you so many more indications on what that price is doing for that specific amount of time, as opposed to, say, a line chart that only gives you the closing price for that instance in time. So another thing that most people already know, but we're going to go over the basics here, right? So we have bulls and bears, right? So bulls are what? Green, going up. Bears, bad, going down. Unless you're shorting a stock, that's a different video. So a bullish candle is going to be a money-making candle, and bearish candle is going to be, that stock price or that coin price is falling for that time period. There's a different candle for every single time period imaginable, pretty much depending on what exchange you're at. There's 1 minute, 5 minutes, 15 minutes, 30 an hour, a month, a week, you name it. So let's get started here. So a bullish candle, bearish candle. Typically, the bullish candle is green, bearish candle is red, as we see here. So there's quite a few things to learn about these. So you have one, the body, right? This is the body of the candle. It's very important. So let's see, hopefully my mouse will work. I'm having some issues with this wireless system I set up here. I just set up all this stuff this week to be able to do this presentation for you guys. So hopefully the audio sounds good when we got this mic and this wireless stuff, so just bear with me. So we have the body here, right? This is very important. It's the exact same for the bull and the bear candle. So they're different though. They're essentially reverse. Yeah, Richie. I am thinking about BCH. Sorry, it's funny having you guys being able to text me through this. I am thinking about BCH. I'm glad you bought in, JJ. That's awesome. See, this is good. This is a good conversation. But as I'm giving this presentation, you guys are all making your trades and making out like bandits. I'm pumped for you. That's okay. EOS is doing wonders for me right now. So let's go. So we have open price here on your bullish candle, right? But your open price is also here on your bearish candle, right? So as you open, let's do this, and you're closed, right? So when you see a bullish candle, a green candle, it'll be open, the price will open down here, and the price will close up here for that instance in time. On a bearish candle, the price will open up here and close down here on the body specifically, right? So then, of course, you have your upper wick and your lower wick. So the wicks will show the high price for that instance in time, right? So now that we have gone over the body, we've gone over the wick, we've gone over the lower wick, we now know that the price is going to fluctuate for this instance in time between the whole entire body, the top of the wick, and all the way down to the lower portion of the wick, right? So the very highest price is going to be here, the very lowest price is going to be down here, right? All right, cool. So we got that open here, close here, open here, close here. This is the body, this is the wick, upper wick, lower wick, and then bullish and bearish. That's pretty much it. We're going to talk about it a little bit more as we go through a couple of these slides. But that's a pretty good breakdown of it right there. And then I just wanted to bring out the line chart here to kind of show you guys that, you know, once you start getting used to looking at your candles, you're probably not going to want to go back to your line charts. I mean, line charts are good, right? I mean, as long as you're making money, I do not care what kind of chart you're using. If you're using line charts, you're using candlesticks, you know, if you're making money, you're making money. And if it works best for you, it works best for you. So that's something that's, I think, really important about trading, is finding what works best for you. If, you know, if you're a day trader, if you're a swing trader, or if you go long, you know, and the details of what those things are, if you don't know, we'll probably discuss in another video too. But let's see, let's look at my notes real quick. That's pretty much it on that. I guess one thing I want to say on line charts that maybe not a lot of people realize is that even though you have, you know, your line chart connects, in a sense, your line chart rounds off prices, right? So you'll see all, on a candlestick, you can see so many different prices at once, essentially, right? You'll see your upper wick, your lower wick, your body. You can see all these prices at once in one instance. However, on a line chart, you only see the closing price, right? So it'll essentially like round off the highest part of the wick. If you can just imagine what I'm saying, I didn't include this in here, obviously, but so it's like rounding off the closing price, or it's including the closing price, rounding off the top of the wick, rounding off the bottom of the wick. So you're not going to see your highest price. You're not going to see your lowest price. So it is very important to me as a trader to be able to see, you know, 4 or 5 pieces of information within one instance, as opposed to this rounding. So, like I said, whatever works for you, you know, that's on you. Like I said, these charts only provide closing prices. It's minimal data, and as a trader, I think you want the most data that you can possibly get. Like I said, depending on your trading strategy, you will definitely need to analyze, you know, your time period down here that I'm trying to flash. To what you're trading. If you're day trading, if you're going long, if you're swing trading, you definitely need to mess around with your time period. So this is a screenshot from Poloniex. A lot of cryptocurrency guys are more than familiar with Poloniex. It's been around as long as I've been trading, way back when in May. So yeah, long time. Like I said, you just want to focus on the body of the candle, and candle wicks, in my personal opinion, show trader emotion. So yeah, I'll get into trader emotion. I was just thinking about how I want to discuss that, but so you see here, you have these candle wicks, right? I'm not really too worried about candle wicks when I'm analyzing a chart, whether they're the upper or the lower. You can see, you know, we're going to get into support and resistance and all this stuff, trend lines, but you can see how there's kind of a resistance over the top of those 2 chopsticks, one on the left and one on the right. Right, these are chopsticks right here, bull and bear, right next to each other. there's a resistance line over the top of this. All right, doctor, on trading, how do we see overbuying and overselling? Perfect. So that's going to be on RSI, so your relative strength index. I actually did include this, so I'm glad you brought that up. We will get over that. Does that answer your question, Puff and stuff? Because I know RSI will definitely cover that. So shoot me a text. I know you guys are a little bit behind me on that. So I just want to zoom in here and give you guys just a little demonstration on exactly. Cool. All right. Yeah. RSI. So we'll go over that for sure. So it's a little zoomed up here, of course. I kind of wanted to go over exactly what I was talking about. Like I said, I know some people are, light years ahead of me right now, and some people don't know anything. So I kind of want to find like a medium line here to, break down everything. If you don't know, hopefully I teach you at least one thing you didn't know before. So now, before we had these candles, right? How when you're looking at the chart, you're like, I don't know what that means right there. So we're going to look at a chart nice and close. And we're going to see that we have tons of them. Some of them don't really have a wick. Some of them don't really have a body. So let's go over this right now. So these are pretty easy right here, right? So we have a bullish candle. Is my pen not working? Let's try this out. You have a bullish candle. Sweet. A bearish candle. And then we'll get to the talking later, but that's some pretty good resistance right there, huh? So a few other things to note, right? So you have wick here, upper wick, lower wick, no wick. And then this is a pretty interesting one. I can't remember what this one's called, but there's really no body. So no matter what time period you're looking at, when you don't see a body on a candle, it essentially means that the traders have agreed upon that price for that time period. So it's really cool to see that in bigger candles. I don't even know what size candle these are. There's probably like 5 or 15-minute candles. But if you're looking at like day candles especially, and you see that there's a real small body, it means that traders are more or less agreeing on the price of that coin or the price of the share for that stock. And it's more than likely means that there's a consolidation period coming, or there already has been a consolidation period coming. And we'll talk about consolidation as well. One thing I do want to note on the candles, like if you're playing short term, right, so you're day trading, you might be trading within a few minutes to a few hours to, I'd say under a day is day trading. You're going to want to use all the way down to the 1-minute candles, the 5-minute candles. Let's see, down here, right? Down here. This is Bollinger. They don't really have a 1-minute chart. I think other ones do, like Binance has a 1-minute, which is pretty cool. Doji, is it Doji? I think it's Doji. Thanks, Cody. Yeah, there's so many different candles. We could probably do an entire video just on the different kind of candles that are out there. Like I was saying, the chopsticks, the Doji, as Cody's saying right there. That's pretty cool. But you definitely want to use a different time frame if you're, swing trading. So you're holding from maybe a couple days to a couple months. You're going to want to use, for best entry, you could still probably use hour candles, but you're going to want to use a day chart. And I just call it a daily. If you're going long, so you're holding for a minimum of, let's say it, the technical definition of going long is probably a minimum over a year, especially with capital gains taxes. But I'd say at least a few months, a minimum of a few months to multiple years, 10 years, 20 years, whatever. You're going to want to use nothing less than a day candle. And more than likely, you're going to do, especially if you're a Warren Buffett guy, you're going to be analyzing weekly charts and monthly charts. I know that's what I'm doing on a couple of the stocks I'm in right now. And that's all I care about. I do not care about the day-to-day fluctuations. And I think that's where a lot of newer traders kind of get flustered, because they're like, oh my God, the stock's dropping and, going up, all this kinds of crazy stuff, especially these coins. But if you're trading long, don't worry about that stuff. Don't even look at it. But that's easier said than done, because I know I'm checking my stuff every day, because it's part of the fun. So let's keep on moving on. So volume. There are so many indicators out there, right? You could probably name 20, 30 off the top of your head. But there's very few that I think that reign dominantly like volume would be one of them, in my opinion. I kind of mentioned it earlier. I'm sure some people can speak quite a long time on volume, but any stock or coin that you trade needs volume, right? I know personally, like one of my own rules for me is I don't trade a coin that's less than 1,000 Bitcoins volume for that day. You know, that might be really low or might be really high for somebody, but personally, that's just what I feel comfortable with. Volume is important because volume is the amount of shares that are exchanged, you know, exchanged hands for that day or whatever that time period is, or amount of coins for that 24-hour period, right? So I wrote a few things down here so I don't mess it up, but like I said, volume is the amount of shares, stocks, or coins, crypto, traded in a lot of time frame. So you can see it down here on, again, this is a screenshot from Poloniex, that the volume's down here. So you will see, again, that the volume, there's a surge in volume here when there's a surge in price, right? The price is trying to break this resistance right here that we'll get into. So there's a lot of transaction here and it gets knocked back down and the volume goes up here again at the same time. And a couple things are taking a dig now, hey. Just got a LTC dropping, a couple things dropping, huh? But probably BCH is unaffected by this downturn right now. And on that note, that's a perfect time for a tangent that if you are a newer trader and you are terrified of pullbacks such as what is happening with a few things right now, don't be. Just have a couple extra dollars sitting in your bank account and just throw some money in there. Never, this is so much easier said than done, but when something's pulling back, try not to get scared, try not to get worried, and just try to envision it as a time to buy in at a cheaper. I always just try to think of it as a fire sale. You know, don't ever freak out. I mean, if you got a plan, stick to it. If you have a stop loss, execute it. But, you know, if you're going big and you're going to go long or you're doing whatever you want to do and it pulls back, you know, either execute your plan and get out or hold on, right? HODL, right? Hold on for dear life and just hold on to it and don't worry about it pulling back, and throw some more cash in there and lower your average, right? So, as I already pointed out, you can see volume here. And if there's low volume, your purchase or your sale may not go through. So that's a super important note to make, right? And I know I'm probably going over a few things here a couple times, and that's fine. I just want to make sure I hit some things home. And volume is one of those just really, really important things, in my opinion, and I think in a lot of traders' opinions. So, for example, say you're trading a stock that's a $1 penny stock, and the price is dropping, and you have a stop loss set at 95 cents. And right now, I'm assuming everybody knows what that is, but that's an automatic limit purchase for 95 cents, so that your sale will go through at that time period, right? So you have a stop loss or stop limit set for 95 cents. If that price is dropping really quick, as penny stocks do or coins do, and it goes through that 95 cent, yeah, it'll trigger. Yeah, the system will try to sell your coin or your stock, but if there's no volume, it is not going to sell. I don't care. The system doesn't care that you set a stop limit at 95 cents. You need volume. You need buyers and sellers. You need more of them. If there's no buyer for that 95 cent sell, it's not going to work. It's not going to go through, right? So that's something really important to consider. And on the inverse of that, much like everything we're talking about on TA has, you know, a reciprocal, right? So for every positive, there's a negative, and every negative, there's a positive, right? Bulls and bears. So if you're trying to sell something at $1.05 and you have a limit sell, you know, above to make some green, if there's not a buyer there and it's moving too quick or it's dropping from 110 to 105, it's not going to sell. So you need to trade with volume. If you take anything away from this, I really hope you take that away. Thanks, JJ, for pointing out that BCH is now 32.29 as my LTC and other currencies are dropping. I really appreciate that. But I really do hope some of you guys got in on that. No, that's super cool. That's going to be awesome that they're on Coinbase now there. Now Coinbase will break again for the next day or two, so hopefully you guys aren't trying to do anything. So any more questions on volume? I'm going to pause here for a second and see if there's any questions here at all. I'm looking over my notes here, and there's actually a couple things I want to put out if anybody doesn't have any questions at all. I just want to talk about if there's a breakout or a breakdown. An increase in volume is obviously very important, but it should also be used in conjunction with the support and resistance that we're going to go over next. So I always just need price and volume together. Like, they go hand in hand. So just always watch that. And I would probably say that if a stock or a coin or whatever breaks out without volume, essentially a lack of an increase of volume, then I would be very weary of getting into that trade right now. Okay, so no questions, no nothing. We're going to keep on going. So support and resistance, as I say, hey, these are my favorite indicators. I preach it to everybody I talk to at work, or whoever I meet at the whatever I'm doing, honestly, because I know probably like most people here that love trading coins and love trading stocks, they're going to strike up a conversation with somebody when they hear somebody mention one of those. So these are my favorite indicators, and probably, other than volume, of course, what I use more than any other indicator. So I kind of touched on it before when we were talking about candles, but you want to focus on the body of the candle when applying these, and we'll get into that. So as we see here, try to make this go completely over to where support and resistance is being represented here, but it's also, as you can see in the support here, initially, it can also inversely, like I was saying, everything has an inverse. It also becomes resistance, right? So that's pretty cool. That's really something neat to look at. Now, if you're day trading, you can really just jock this support and resistance, waiting for something to break out, waiting for something to break down if you're shorting it, but pretty cool going on here. So you can see what is support, what is resistance, right? You can see there's support here. What is this price? 29.7. What are we looking at? ETC just a few days ago, it looks like. So there comes down, and this means that traders are more or less, of course there's the wicks, right, but more or less agreeing that they're not willing to pay anything less than $29.70 for this. So the price is going to stop here. And, sometimes it's not going to be perfect, it's a little bit coming down here, but you can see that more or less it's bouncing here, it's bouncing here. People are just, for these instances in time, they're not willing to pay anything less for that. But on the reverse side, right, they're not willing to pay anything more than whatever this is, $32 up here. So then essentially what's happening is your stock price or your crypto price is bouncing off support, bouncing back down off resistance. So then that leads you right into something that is consolidating, right? So now this coin, Classic, is consolidating right here. So that just means it's bouncing off your support, bouncing off your resistance. People aren't wanting to pay anything less for it. People aren't wanting to pay anything more for it. And it just keeps on getting down. And then once it finally breaks, as we see here, it stays under for a while. But then, honestly, I think it sounds silly, but it's pretty beautiful how it works that this was previous support. Now it's the same resistance here. So that's one of the reasons I, gave this chart, and it's a recent example. But this was support, and now it's resistance. Now they don't want to pay any more than this, for this time period. And of course, it changes, and it depends all what time frames you're looking at. because you get quite different support and resistance. Because as you see here, this is only 2 total days here and 30 minutes. So each candlestick here is 30 minutes. And if you go to 2 hours, then all these will change to 2 hours. You're going to see a little bit different, right? So when you're analyzing charts, you have to look at different time periods. You just got to. You can't make a trade off of a single time period, no matter what you're doing. I mean, it behooves you to want to look at some different stuff there. So I've read this a few different places, and I kind of wrote it down here so I wouldn't miss it, but I would always recommend, and me personally, I never buy within a consolidation period whatsoever. So like we were saying, this is the consolidation period, right? So I'm not going to buy a stock or a coin in this period right here, because essentially I don't know which way the price movement is going to drive this, or the price action is going to drive this. I don't know if it's going to break out, which means a breakout is it's literally when the stock price breaks out of this resistance and it continues north, right? As opposed to a breakdown right here, breaks that support and it goes bearish for that instance. So you have a consolidation period. You don't want to buy right here because, hell, if you bought right here, you're like, oh man, this is an uptrend. This is good. I'm going to buy right here. Oh man, breakout. It's not a breakout. Don't be fooled. Look at your lines. Go in there because this is bouncing off resistance, really strong resistance that's coming down, and actually it's bouncing off so hard that it's breaking your support right here, right? So don't buy in consolidations period. If you were going to you're going to trade this on a bullish run, I wouldn't, in this, we're looking at 2 days here, I wouldn't trade anything going on here. Unless perchance this support line here was a little bit longer to the left, right? Hold on, let me get my marker here. If this support line was a little bit longer to the left, and I had the 24 hours to the left of us on the screen, I would imagine that this was probably underneath this support line the entire time. So you're going to be watching and watching. You're going to be patient, right? Because all traders are patient. It's really hard to be patient, especially with these fast movers. But you're going to be patient, and you're not going to buy down here. You're not going to buy under consolidation. And as soon as it breaks out up here, you're going to buy. So you could have, again, a limit buy set at around, what is this, 30.3 right here, and you would buy. And then, of course, you'd be in the green right now. And yeah, it's going to pull back a little bit, but it eventually went up. I think I'm pretty sure ETC went up to 40. So if you're day trading that, you could have hit it from $30 to $40, which is an incredible move. That's about 33%. So that would be a great day trade. So that's something to consider. And I would never, there's so much volatility in stocks and crypto, right? So if you bought here and, it broke back down, a lot of people get upset, but you can't be upset because it eventually went up. So a lot of times when things break out, you have to know this, that when things break out, they're more than likely going to pull back down and then they'll go back up again. So you can buy on the breakout and the price is probably going to get driven back down. And then it gives you another opportunity to buy in again, or if you miss the breakout, to buy in again. And then more than likely it'll go up. Obviously, that doesn't always happen, but it's a good indicator. Let's see what JJ said. What do you use to draw on the charts to see the support and resistance more clearly when making trades? So on crypto, this is a hard one for me to answer right now. I haven't found an exchange or a website that I've really liked on crypto, but I believe in Crypto Island there was somebody that was posting about it. Please post a link if you're one of those guys right now, so that we can all see. So I don't use anything for support and resistance or for any kind of drawing on coins right now. I do it in my head, and a lot of these things I've just seen it for so long. I can see the support, I can see the resistance, and I try to do it in my head. And then of course when we're going to get into simple moving averages and some Bollinger Bands, those things kind of help round some things off or line some things off depending on what you're looking at. But as far as stocks go, I have the page at the very end of all these slides, but as far as stocks go, there's the stock. It's literally called like a stock app. Just remind me when we get to the end of the slides, I'll give you it. But it's a stock app. It's online, and you can draw literally whatever indicator you want. It's really good. And I actually think JJF showed you in person that one, so it's the same exact one. But hopefully we can look into the crypto one, and we can probably get a good answer on that. If not, I'll do some digging after this, and I'll shoot it to you, and I'll post it in the comments after I find it, because this video will be up after we finish the live version. So support and resistance. Let's see here. Yeah, so we pretty much covered everything that I use, and I guarantee you Wikipedia or whatever, or you ask your friend, they'll probably know a little bit more for each thing that I'm going over. But as far as, as I trading with TA, this is as much as I use it, and it's just practice, 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 practice. Just looking at the charts over and over again. I like looking at charts. I don't mind looking at it. It's fun to try to figure out support and resistance. And when actually you see it happen in real time, it's pretty cool to see prices bouncing off and between and consolidating and then being able to apply it. But obviously, like every indicator that we're going over here, it is incredibly easy to talk about, but it's so hard to apply in real time. I know any day trader, any kind of trader, probably that uses this, it's incredibly hard to use. So take it as you will. So we have horizontal trend lines essentially here, right? Support and resistance. Then we're going to go over actual trend lines. So trend line is, let's see, yeah, comes up, stole this from the internet, perfect. All right, so we have a trend line support, right? So this is a bullish run right here. We have a trend line going that at the same time, you guys remember here where we have support and resistance, right? Bouncing off at 29 for support, bouncing up at 32 for resistance. You can see the exact same thing here on a trend line, right? So, of course, you're not going to have the same exact price, but you can clearly, pretty darn clearly see, at least, in hindsight, that there was a support here as it bounced up. And, if you're trading bullishly, right, if you're trading in favor of that stock or coin price, then this is something you want to see. And this begs another one. We have a low down here, right? And almost, I'm not really going over it in this video, but this is like a double bottom. Oh my God, that is a huge circle. I meant to do the small ones here, but my mouse on the wireless stuff is going crazy. But there's a double bottom down here, right? So support, support, and then this thing takes off, right? So then you have higher support and higher support and higher support. So you want to be looking at what they say as in higher lows, right? So you have a higher low here, a higher low here, higher low here, and here, near here. And then where these green lines are, you can clearly see that there's a higher high. So bullish, you always want to be looking for higher highs and higher lows. So I think that is pretty good representation there. But if we look to the left of the chart here, you can also see that there's lower lows and lower highs, and that's something, man, this mouse is terrible. So just please, just look on the left. I'm not going to draw it. This thing's freaking out. But there's lower lows and there's higher, lower highs as well, right? So it's clear to see that's a real bearish trend. All right, so any questions on any kind of support or resistance or trend lines? Let's see here. So Dr. Puff and stuff. There's a bar on the left in Trading View. Cool. I think that's the one that I heard of. I think it's the line towards the top of the bar. Trading View website. Looking up Trading View. Yeah. I think you're right, Puff and stuff. I think it is Trading View. Hopefully you can get some stuff, some clarification on what that is exactly there. So next we're going to go to SMA. And SMA is one thing that's utilized in the Bollinger Bands, which we'll get to next as well. But SMA is a simple moving average. So what that means is it's an average. So that means, what is an average of? It's an average of closing prices. So on a stock, since we open and close every single day, you'll take the close price of the stock that day and you'll average it. So you have the red line. I believe that's a 50-day moving average because that's what I like to use for more of a shorter term swing. So it's the average of that closing stock price for the last 50 days. A more long-term one is the purple line, and that's a 200-day moving average. I use that for my long trades, and that's the average of the closing price for the last 200 days. So hopefully that makes sense. It's pretty easy to understand there. And then simple moving averages, I try to build the slideshow in a way that it would add on to each next slide. So like you'll see moving averages here. You have the 50 and the 200 day. They actually come together down here, and they'll do a sort of a crossover here. So that's almost getting into the MACD, the convergence and divergence, a completely different indicator. But you'll see that everything has a little bit to do with the next thing. And it really is dependent on what indicators work best for you, and then putting them together. I would not recommend using a ton of indicators. I use, the support and resistance, but that's never really on the screen. I do that in my head. And then I'll have some moving averages on there, Bollinger Bands, and volume. And that's really it. Occasionally MACD, but lately I haven't been using that. So it's just finding what works best for you, right? Let's see if I have anything out here. So like I said, it's the average price for the last however many days the stock closed. And like I said, 50 and 200, those are two that I use personally. Those work really well for me. And then the average price for the last X days the crypto closed. Oh, and we talked about crypto not closing. It's 24/7, 365. But technically, you can see if you're watching it, I think it's Greenwich Mean Time. Correct me if I'm wrong. When a new day opens, like a new day candle opens for crypto, you can see, if you're on the East Coast, it's like 5 hours before midnight, but a new day candle will open up at that GMT time, right? So when GMT time at midnight, that day candle will close, and that'll be the closing price since crypto never closes. That may or may not be obvious, but I don't know. Want to say everything just in case somebody has a question. Let's see here. Yes, it's not too much to say about SMA. They just really help analyze your price trends, right? And kind of like we had trend lines in the previous one, right? Let's go back. We have a trend line here, trend line support, and you can see the buy zones in the blue and the red over there, bouncing off of it. People use SMAs for similar stuff. They really do. So you can see when people are talking about a stock, since I'm looking at a stock right here, we're looking at Netflix, of course, NFLX, Netflix, and this is on that stock site I was telling you about, JJ. But, excuse me. So you can see that it's more or less coming off that 50-day moving average, which is pretty cool, right? And it's well above the 200-day. So you would assume that if it got close to that 200-day moving average or dropped below it, there's probably a long-term change about to happen. And what I mean by that is if you go down to the bottom left of the screen and you see where we have this crossover between the 50-day and the 200-day, you see the stock price coming down, and you see the 50-day crossing over to the 200-day. But more importantly, on the 200-day, you see the stock price. You see all those candles are bouncing off. I wish this mouse worked perfect. But you see all these candles bouncing off the 200-day moving average right here, right? And then it breaks through. And then a few days, because this is the daily chart, right here, 1 day. So each candle represents 1 day, remember? So you see it breaks through the 200-day, and then a few days later, there's a crossover. So that would technically be two indicators now that the price is moving bullishly. So I think that's pretty cool, right? So that's 1, 2, 3, 4. I'd say about 7 trading days that, this broke out. And like I said, there's a breakout, and then there's this huge pullback buying opportunity right here that comes all the way back down to the 50-day moving average. So you have a breakout over the 50, or I'm sorry, over the 200, comes back down to the 50, and then there's this huge gap up. I mean, so you would just made a killing there. That's like roughly 20% jump up right there. Then there's a breakout, and of course another pullback to give another buying opportunity. So that's the great thing about patience in trading. There's usually a pullback if you have the patience. It's incredibly hard motion to pull back, right? So there's this gap up here. This is a stock, right? So there are such things as gap ups. There's no gap ups in the crypto world. A gap up, since stocks open and close every single day, right? So there's actually so many things to talk about, but there's pre-market movements in stock world, and there's aftermarket movements in the stock world. So certain people with certain privileges, and I don't know what those are right now off the top of my head, are able to trade pre-market and after the markets close. For the American stock markets at least, there's always a lot less volume, so it's a dangerous realm to trade in. But you will get these gap ups as you see right here. So this was like the closing price clearly for this day in October, and what is this, 2016, October of last year? I don't remember what news this was, but it gapped up. So there's probably some big news, or October, end of third quarter, maybe a great earnings report, maybe. And the stock price just skyrocketed overnight because the news came out probably after closing that day in October that they had a good earnings report, right? Because you have an earnings report every quarter on these stocks, and it just traded real high the next day. Cool. So I think that answers that. Let's look at the chat here real quick. Cool, you guys. So it looks like it is the trading view that helps out for examining the charts for crypto. So unless anybody has any other questions on SMA, we'll continue going. But SMA is pretty cool, like I said, and it's definitely utilized in the Bollinger Band as well. All right. Clearly, I already talked about it. I just wanted to utilize PowerPoint to its fullest. Give these cool animations, right? Cool. So Bollinger Bands. So we just talked about moving averages. You can see moving averages here. You can see moving averages here, correct? So you have, it's very difficult to see, but now we're looking at Tesla. Man, I love this company. So one thing we're going to look at first is we're looking at each candle is 1 week, right? So you can confirm that we're looking at a really long time period because you can see the years down here. So we're looking at quite a few years here. So I want, hopefully, well, the reason I'm taking my time right now on this slide is because hopefully, as I'm trying to do a progression through the video, I'm teaching support and resistance, consolidation, SMAs. I'm trying to teach in order. So I'm taking my time on this. So hopefully people are ready in their heads being like, hey, we're on a weekly here. This is a long-term chart. I see a lot of support. I see a lot of resistance on this long-term chart. I see a break. I see, breakouts. I see breakdowns. Hell, I see places where I should have probably bought Tesla, and I wouldn't have known anything about the company, and I could just look at my TA, and I would have known to probably buy here or to not buy here, depending on how long you want to hold it. So one thing about the Bollinger Bands, at least, is that you can see where it narrows, it's going to show less volatility, and where it widens, it's going to show more volatility, right? All right, whatever. All right, so these arrows on the left, you'll see that the cloud or the bubble or whatever you want to call it is narrowing because this little downtrend, this bearish downtrend to the left of it is consolidating a little bit more here. And essentially the price is staying within this. So it's staying. That's a pretty tight bubble right here, and then the price freaks out. It drops for whatever reason. Bad earnings report. I don't know. You never know. I mean, heck, Activision dropped a couple years ago just because of Call of Duty, whatever it was. Dropped like 30% after DER, and was a perfect pickup there. So you never know with stocks, but it's just they're great buying opportunities. Phenomenal companies like this, they drop big like this. I don't care who it is. It's just buy it up, and you'll thank yourself later. But so you'll see that the cloud or whatever you want to call it widened here and widens here. When the price starts skyrocketing, there's a lot of room vertically. Right, a lot of room vertically. That means the stock price or the coin price is extremely volatile. I know that on most of the crypto sites that you will have a Bollinger Band opportunity. I know that's one of the few things that they offer, that Poloniex and those guys offer. So that's pretty cool, at least. I guess you can do simple moving averages. I think they're a lot shorter on Poloniex, though. I think they're like 12 and 26, and they have Bollinger Bands on there as well. So Bollinger Bands, I have them on there just because I kind of got used to seeing them on there. I'm not a huge advocate of them. Some people love them. But the most important thing to me is they show price volatility. And I have volatility on here so many times because, I mean, that's truly what it shows with the narrowing and the widening of the bands, right? So you got to also think that I'd say probably about 90% of the trading takes place within the, or 90% of the action, not trading, it's all trading, but 90% of the action takes place within the cloud. So some people, I think, get the misinterpretation that if the price breaks out of it, out of the band, then, oh my God, it's going to skyrocket, we're going to the moon. You know, you need to hold on, but that's usually not the case. That's, and we talked about RSI. Well, we haven't talked about it yet. We're going to talk about it, but there was a request on it. But you talked about RSI showing overbought or oversold, right? But more times than not, when I'm seeing it, and you can see it on this chart here where these left arrows are right here, that it breaks out a little bit, right? And yeah, sure, it breaks out a little bit more after that, but it's going to rise, or it's going to fall right back down after that. And again, over here on the right arrow, it breaks out again, but then there's this huge pullback, another buying opportunity, and then it skyrockets out here. But the important part, like I say, and I want to always reiterate, and I want to hammer it in you guys' heads, that you have to use indicators with other indicators. No indicator really is an all-encompassing, tell-all crystal ball, right? So you could be looking at your Bollinger Band here, and you see it breaks out right here next to this right arrow, and you're like, you know, this is just like the last couple times it's done it over the last couple of years. You know, I'm not going to be fooled. I'm not going to buy in. So you don't buy in, and you miss this huge run from 250 to 400, and, you know, now you're weeping alone. But if you were a smart person, where I started the slide, and I kind of wanted you guys to look at on yourself, you would see that there is a huge, huge support line, or resistance line, I should say, since it's on the top, and support. Huge resistance line right here, and a huge support line right here, right? More or less. My pen's kind of shifty, so I didn't really draw it straight, but a lot of trader emotion here, some crazy stuff going on down here, I don't know. But for the most part, you guys can see the support and resistance we have going on here. Hopefully, you were able to pick that out before I even got to it. Just love the support and resistance. It shows true. So we have now a couple different indicators working at once now. I'm looking at my chart. I want to get into Tesla long term. I'm a big investor, whatever. I want to throw some good stuff down here, and I don't want to touch it for a while, which is probably good for these blue chip stocks, right? So I'm looking out here. It's breaking out of the we're on the weekly candle, right? So it's breaking out. So I'm getting a little, you know, interested. But it doesn't break. It gets knocked right back down from that resistance. And then it comes back down, and it comes up and tests the resistance again, and then it breaks this resistance. And now we're out for the first time since, well, this is a new high for the stock at this point in time. But I'd say it's the first time it's really tested this resistance since July of 2014, when that wick went over once, which is another reason I don't care about wicks per se, for the most part. But it broke. So what I'm trying to to reiterate is use them together. So you have the breakout of the cloud for the Bollinger Band, which kind of cues you that we're moving real quick, especially since this is a weekly. That's pretty cool. And then you have the pullback, test over the support, or I'm sorry, it's test over the resistance again, and then it breaks that resistance, and you're like, all right, you pull the trigger, I'm in, you know, easy 100,000. No, I'm just kidding. Easy $100 on Tesla. Wait, it's not a coin, so you can't buy partials. God, don't we love coins? Buying partials. Cool. So you would have bought Tesla right there, and it would have rose up. You could have, depending on how you wanted to trade it, you know, traded around like 380 or whatever this is. And then the volatility's been pretty crazy lately. Not really sure. Haven't been tracking it too much, but that's essentially how you use that. And then if you look on the bottom, you probably already read it. But so what is the Bollinger Band? It says a moving average in the middle, right? Usually, I think they're 20-day moving averages in the middle, depending on what time frame again you're looking at. But we're going to go with 20-day moving averages, and then the upper and the lower band are, like I said, right there, 2 standard deviations away from the SMA, right? So when you're setting it up, you can just go in there and you can click how many deviations you want. But from all the reading and all the YouTubing that I've done in the past few years, it's always been 2. That gives you a pretty good price to look at. We kind of talked about breakouts and breakdowns, but I don't think I've defined it yet. But a breakout, as we see over here, if somebody here doesn't know, I think everybody may, but a breakout is when it breaks out of resistance. A breakdown is when it breaks down out of support, right? So that's a good thing to note. So RSI, who was talking about that? Not really sure. No worries, let's get into it. RSI, again, we're looking at a stock here. We're looking at Facebook. We're back to the daily chart. So each candle represents 1 day. So it's a stock, so you see we have a lot of gap downs, we have a lot of gap ups, and then we have the RSI, which is our indicator line on the bottom here. Alright, so the RSI typically, I don't think I've seen it any other way, but typically comes with this line on top and this line on bottom. So you see the 20, you see the 80, right? Now forgive me, I am, out of all these, I don't use RSI. I'm not a pro on RSI. I'm not a pro on any of these, clearly. But on RSI, the important thing for me is, I can't remember if it was a percentage, I'm sorry, 80% or 20%, but what I do know and what the important part is to take away from this is that on here, on Facebook, since we're looking at Facebook, this stands out, this peak, if you will, is now kind of showing that Facebook is into an overbought situation. And closer down here to 20, it's more a little bit oversold, right? So what does that mean? Can something really be overbought or oversold? No, not in my opinion, and I'm pretty sure factually that's not how it works. You can't buy more of what somebody's selling. There always has to be a buyer and a seller, right? Especially for stock and for crypto too, right? But what that means is that probably the price is rising incredibly fast. People are paying more and more for that price quicker than maybe than that can handle. And as you see here, this is the exact same place. You know, it gets consistently driven back down, right? Went up too quick, gets drove down. There's another resistance up here. It works perfectly with this RSI. It's overbought, right? Boom, gets knocked back down from that that resistance, and now you're not even going to be overbought anymore because that overbought situation right there created this resistance where that price isn't going to go over anymore. So once again, I'm a nerd. I think it's pretty cool how the indicators work together, but you can definitely see how the overbought RSI creates a resistance here that knocks the stock back down for months. Is that months? No. No, it's a couple months, yeah. So it knocks it down pretty good. And then you'll see it goes into a little bit of oversold situation down here. Nothing too crazy because nothing's poking out down here, but you know, it gets knocked down a little bit. And then finally, if we're looking at support and resistance again, because you know I love support and resistance, it breaks this resistance right here, and I mean, now it's crushing. It's cruising from 153 or 155 all the way up to 175. So that's pretty incredible price movement right there as well, especially for a company like Facebook. But yeah, just use them together. Support and resistance works well with most of these. I try to take off the Bollinger Bands and all these SMAs just so we could focus on what the slide was going over. But essentially, it's a momentum indicator, right? And like we said, primarily used for overbought and oversold conditions. Already talked about this, overbought, oversold. So let's move on to the MACD. We're combining even more things together now. Looks like we're still going good. Hopefully, audio and visual is still good for everybody. But I'm going to keep on rolling through this. We don't have too much more. I don't want to drag it on too much, and then I want to open up to some questions and some feedback potentially. So let's go. Next thing is the MACD, right? So moving average, convergence, divergence. So we kind of touched on this when we went over the SMA, right? The simple moving averages. So you can already see down here, it looks like we have some SMAs going on. You can also see that, we have the 12 and the 26 going on right here. This is a typical, typically the most used for a MACD. And what the MACD is doing, as you see down here, it's showing the relationship between the two moving averages. And for a lot of people, that's going to give them a buy or a sell signal. And actually, we're looking at Facebook again. And all right, thanks, JJ. Yep, sweet. Just want to make sure we're still good. Excuse me. So MACD is actually pretty cool. I used it a lot when I was day trading a couple of years ago, when I thought I was like this pro Tim Sykes kind of guy, right? That didn't work out too well. So now I swing primarily. If you were interested, I swing trade. I hold for days and weeks and months. Nothing less than that. And it works out the best like that. But you got to find what works best for you, right? So let's see here. Boom. All right, so we got our MACD here. We were looking at the simple moving averages before. You'll remember that we had a crossover between the 50-day moving average and the 200-day moving average. And that was showing us a long-term price change, right? So that was 50 and 200. Now we're all the way down to 12 and 26. Excuse me. So 12 and 26 is clearly a lot less of a time period. So this will be constantly, crossing over and crossing back over. So let's take this one right here. This is a really good example. You have a crossover here, and you have a crossover here, and this is going to help run a point home that I started this presentation out with, right? So we have our 12 on top, our 26 on bottom, right? Because the longer day moving average, in this example, the 26-day moving average is clearly that price is going to move slower because it's a longer average, bigger average. And the 12 is, less than half. It's going to move a lot quicker. So we have a pivot point here. Our 12 goes over top our 26. And, it happens a few times here, so you got to be careful. And this is where you got to use a bunch of different indicators together, right? But you're watching it here, it doesn't pan through, it comes back, you're watching it again, and it crosses over pretty good. And then, lo and behold, me, I'm going to be drawing support and resistance like it's my job, because it's what it feels like. I'm pretty sure probably 100% of the people in this group here that trade crypto and coins and stocks, it's their second job. Hopefully it's some of you guys' first job, and I'd love to shake your hand. Hopefully I can get to that one day. But support and resistance here, boom. Hopefully you drew that before I drew it in your head. I just want you guys to get in the habit of doing that. So you have the support and resistance here. Like I said, you're using multiple indicators together and thus becoming a crypto god. Stock god. I've been on a crypto kick lately. So you are seeing this is coming off this resistance repeatedly. 1, 2, 3, 4 times. And then this fourth time it breaks out on this long candle, right? And you also have this crossover. You're like, that's sweet. All right, now we broke this resistance and it crossed over. You know, if you're probably a pretty comfortable trader, I would say you probably had a limit buy set for this 158 or 159 right here, right? Hopefully that makes sense. So you have that price just sitting there. You have a buy. I want to buy 100 shares of Facebook at 159 because it's right above that resistance. Bounces up to 158, bounces up to 158. It never goes through, but that one time it breaks through, it's going to automatically buy for 159. Your MACD crosses over, confirming that is a change in price or momentum shift, really, and you just ride it. So once again, you ride it, it gaps up. Holy crap, if you get scared, you sell it. More than likely, you're not going to sell it there. It's going to come back down, and as it drops back down, you're probably going to start getting sweaty because these candle wicks are getting low down here. Don't freak out. But then you see not until this other crossover here, then you're confirming that, yep, the price is staying low for at least a little while, but then it crosses over down here, so that's where you want to sell. So like I said, I'm going to hit home a point right here. The point I'm hitting home right now is that you are never going to buy. It happens, but for the most part, I'd say 95% of the time, you're never going to buy the bottom. You're never going to buy the top, right? So clearly you're not buying at this support level right here. You're buying right here. You're buying from 159. So what is this right here? 168. So that's a pretty good move. I'm not going to do that math in my head right here, but I would take that green any day. And that's a pretty comfortable trade right there between using the resistance, using the support, using your MACD to confirm a breakout. And the Bollinger Bands are there. Just I like seeing them there. It's too naked without the Bollinger Bands. So hopefully that MACD makes sense. Let's see. JJ's got a question. If you miss the breakout, at what point do you not buy into it? Whew, that's tough. It kind of matters to what kind of risk taker you are, I think, with a trader. Typically, my rule to myself, at least, is if a stock or a crypto or like a coin is moving too quickly, I'm not going to get into it. It's just a very safe way to do it, but the safest trade is no trade. I know that I've been burned so many times over the last couple of years that I've made that rule for myself. The safest trade is no trade. You know, if I'm feeling really too weary, I'm just going to hold back, and I'll be a lot more happy that I stayed the same price of my net gains than lost a lot, because it's a lot harder to make back money that you've lost than it is to gain money. That's a completely different tangent, but the math actually works out. I guess I should go off on that real quick so that makes sense, or else you'd be like, what the heck is this guy rambling on about? But say you have $100 that you're trading with, and you lose $5. Now you have $95. So you've lost 5% of your $100. But now you have $95. If you gain 5% of that $95, you're not going to have $100 again, because you'd have to have $100 to make $5 back, because that's a 5% move. So that's just a quick scenario on how that if you're losing money, it's harder to gain back that lost money. And if you make money, it's easier to make more money, clearly. So now if you have $100 and you gain 5%, you have $105, and now 5% of 105 is more than $5, and it just snowballs either left or right, depending on how good or bad your trades are doing. But hopefully that little tangent makes sense. And I've seen a lot of traders use the MACD in relation to the RSI. So like I said, it just depends on what works best for you. Cool. So that's all I have for indicators. These are big indicators, ones that I've used in the past 2.5 years of my short amateur experience. I did want to go over a couple quick things before we open it up to any questions. Like I said, I think most people in here are just looking for a little bit more information on TA. So they probably know a lot of this stuff, and I'm planning on making a cornucopia of different videos with, like I was saying, like what are different buys and different sells, market buys and market sells on limit orders, and you name it. But I just want to go a few things. I know you guys were asking about sites to use for crypto. Clearly, it's much more difficult to trade crypto than it is a stock. Most stocks you can trade on the same exchange, but crypto, like I said, I have, I think, 4 different exchanges right now. I'm using Poloniex, I'm using GDAX, which is a subsidiary of Coinbase. I'm using Bittrex and Binance to trade all different coins. And then for stocks, I use TD Ameritrade. So it's just a few things I wanted to let you guys know. Like I said, GDAX, do not use Coinbase. They're going to charge you an arm and a leg to make that transaction because of just how their GUI is or their screen is. It's a very user-friendly website, so they're going to charge you a lot. So go to GDAX, your funds will transfer over perfectly, and if you do a limit order on GDAX, it'll cost you $0. So that's a lot cheaper than spending like $15 a transaction or whatever on on Coinbase. Poloniex is good. Binance, I know we've had some talk on Crypto Island about that. It's been good for me so far. I only trade 2 coins on that, and then Bittrex I hardly touch. I only trade 1 coin on there, but I mean, none of them have really done me wrong, and I'm sure a lot more people here have a lot more experience. But if you're looking to trade cryptos, you can start there. And if you're looking to trade cryptos and you know nothing about these exchanges, then you should probably talk to me or somebody else before you just go messing around in that exchange, not knowing what kind of trades are what kind of trades. Like, what if you're doing a limit or a market or what the heck you're doing. On stocks, we know that they bunch of different stock exchanges, but these are some of the main ones. And platforms that trade stocks. There's a ton of them out there, but I use TD Ameritrade, and I know a lot of guys here use E-Trade. And the fees used to be incredible, but they've slashed their prices because of applications like Robinhood that have come out that are essentially free fees. I know they scalp it somehow, I can't remember how, but it's a phone app. It's really easy to trade stocks for free, especially if you're trading with a lot less money, like $20, $50, $100, where you can't afford to pay, $5, $10 per trade. I would definitely use Robinhood to get started off. And it's safe. I've used it. A ton of my friends have used it. Check it out. Here you go, JJ. Here's the site that I use for TA. This is technicianapp.com. That's the one I use in a lot of the screenshots. Works perfectly for my stocks, and I cannot wait until the crypto world comes up with something that's as user-friendly as that for coins. Like I said, that's pretty much all I got, but a few things I want to go over, in future videos, and let me know if, I don't know, maybe this sucked, maybe it was great. Hopefully I taught you at least one thing or, whatever. But I want to go over, I know I was talking to Cameron about following your set rules, having a plan, sticking with it. I kind of want to do a little tangent video on that. How to trade off of news, how to trade, fundamentally, which is completely different. Things like that. Should I paper trade? How do I paper trade? I'm not a fan of paper trading. Things like that. I think real time losing your money is the best teacher. If you lose paper money, you're not going to get that lesson to where you see your money sink. What's the difference between more specifically on day trading, swing trading, going long? How does this apply to charts? We touched about this a little bit in a lot of our slides, but I'm willing to take suggestions, and let's see, intro to trading, how to trade, how to set up different accounts, which accounts work best. And then one thing I've been working with Cody, I forgot to add a couple of your books, man, so if you want to put it into the chat, but I love to read, and there's some really great trading books out there, especially, but this one's a really basic book. If you've never done anything, I would recommend doing it. It is dry, so prepare yourself. But it'll tell you everything you need to know about stock world. The Intelligent Investor, if you're trying to trade like Warren Buffett, that's a great book for you. One Up on Wall Street's a great book. Trading for a Living. Random Walk Down Wall Street. How I Made $2 million in the Stock Market. I love that book because it's about this guy from, I think, the 40s or 50s that trade it long distance, and all he did was use support and resistance. And obviously, I've probably said that like 100 times, and I love support and resistance. And he was just this dancer that traded via like teletype or whatever they had to communicate back then. I can't remember, and he just absolutely crushed it. So $2 million back then, you know, he made it pretty crazy. Other finance, this is not having anything to do with trading, but The Millionaire Next Door and Rich Dad Poor Dad are great books, especially if you're trying to learn how to be frugal. Read The Millionaire Next Door. Let's see, can I go over reversals or in future vids at least? No, JJ, you definitely didn't miss that. I did not go over reversals. I'm going to write that down. That's a great video. That's easily an entire video by itself, reversals. Like we were saying, between bullish and bearish trends, you saw on, let's go back. Oh man, this might take forever. Bear with me. All right, here it is. Cool. So, yeah, no, here we go. So we were kind of talking here, you know, I said, hey, here's a bearish run, here's a bullish run, and here's a double bottom. So essentially the price is coming down to support twice and getting knocked off of it and then coming back. You know, there's a bunch of different head and shoulders patterns. And like I said, everything has an inverse. There's, you know, bearish and bullish reversals, and I think that would just be a good topic so that this one doesn't run too long. We've already been going, it looks like an hour and 20 minutes. That's crazy. So that'll definitely be a topic for another point. That's all I got, guys. If you want to ask some questions, I will stay here as long as you need me. I love talking about this stuff. I'm just glad that I went an hour and a half without checking the markets for crypto. So I probably didn't have to see that madness. If you have any questions, please ask them. Other than that, you know, I'll give it a couple minutes, and then I'll probably just sign off, and the video is being recorded, and it will be saved to this web page. And then, you know, we'll do future videos. I don't know how often I'll do them, but I'm kind of working on that. And I hope everybody got the information they could get out of it. And really appreciate you guys tuning in, and hopefully you can subscribe and then you get notifications for that for later. But right now I'm not really seeing any more. Nope. Okay, cool. Yeah. Cool. Thanks, JJ and Puff and stuff. I appreciate the feedback. Like I said, I am in no means have ever done this before. Just trying to put this together last minute for you guys to help out. So I hope I taught you just one thing at least, if not everything. And it's a pretty fun experience, so let's keep on doing it. I love that the trading market, the trading world, the crypto world, it's all about helping each other, and we just need to continue doing that. I hate seeing, you know, the bashers out there, so let's just continue working together and helping each other make money, because that's what we all want to do. So I really appreciate it, guys, and I guess I'm going to go ahead and sign off here in a minute. And let's go. I need to digest it all. A lot of info. Okay, cool. Awesome, guys. You can just, I think comments are enabled on the actual video after it gets processed and posted to the site. So you can always post in there whether, you know, hey, maybe try this with your audio, or try this with your video, or, you know, do this next, or, you know, include this in your next video, or whatever. I'm open to it. I just want to help you guys learn, and I know that's all we really want to do, right? So, all right, guys. Well, I hope you have a good night, and I'll talk to you soon.